This is why 95% of traders lose money. Risk management, I think, is got to be one of the most challenging subjects around trading for anyone. And I've worked with thousands and thousands of students over the last couple of years as a mentor and a teacher in this industry. And I found that is quite literally why 95% of traders fail. Everyone can learn all the technical strategies, how to trade from a technical or fundamental perspective, how to chart. Everything can be learned in time, but risk management has been something that wasn't only hard for myself. When I started out trading and over the years, I've kind of adapted and developed how I manage risk further with kind of the intention to squeeze the most profit I can out of my system as a whole. So let's get right into it. This, what you can see right now on my screen, is my risk management calculator. There's a series of inputs that I'm essentially gonna run you through, break down the data that I track, and essentially what I've done to create this calculator. The overall premise and kind of the initial idea behind why I created this calculator was for myself to be able to squeeze as much profit I can out of each and every trade. Well, obviously the overall intention at the end of the day is to be a consistently profitable trader. Now, I'm gonna run through what this actually is, how this came to be, how I created essentially the algorithm that is used behind this calculator. We'll cover the inputs, everything that I track in my trading to then be able to essentially get, well, what you will see within the risk metrics. So to simplify, what this calculator actually does is it will tell you what size to trade, exactly how many contracts to buy if you trade options like I do, or how many shares to buy, or whatever asset you're trading, how much worth of that specific asset to buy based off of certain variables, using also data that is specific to yourself. Okay, so let's just hop right into it, and I'm gonna run you through some examples of actual trades and how I implement this on a daily basis within my trading and my system as a whole. Now, the first variable that is going to be specific to, well, myself in this case, using this calculator, is going to be my win rate. So I will have a win rate, and this is what I keep track of, a win rate behind each setup that I trade. I've got my overall win rate when it comes to all my trades together, and then per setup, which is just the way I go about categorizing or defining a trade, I have the win rate behind those respected setups. So based off of that, that is one factor that this algorithm is going to take into consideration. Let's say you have a 75% win rate, okay? Now, that is where I'm sitting at right now. It's about a 75% win rate overall between my three main setups that I'm trading this year. We need to then know both our average winner and our average loser. Now, again, you want to decide whether that is going to be based off of all your trades together or that is going to be based off of the individual setup. And that really comes down to how much data you have, how many trades you've taken behind each setup. But let's just say, you know, the overall win rate between all of our trades together is 75%, and our average winner between all of our trades together is, say, 30%, okay? Lastly, our average loser, again, this is in percentage because we can't use our average winner or our average loser in dollars, because the problem with that is that it is affected and correlated by the actual position size. And what we're trying to get here is the position size that we should trade. So if we used a number, for example, our average winner, say it's $1,500, well, that is directly affected in the first place by your position size. So that is why we use percentages, because it actually correlates to the way you trade, the way you go about charting, running your technical or fundamental analysis, setting your stop loss, take profit. And so let's just say theoretically our average loser is 10%. Now, over here, you can see the expected return. Now, anything above 0% is a positive expected return. That will tell you if you are a profitable trader or not, based off of these three variables. Now, for example, if I had a 40% win rate and my average winner was 30% and my average loser was 10%, well, I'm still gonna be a profitable trader. You can see my expected return is 6%. Now, the furthest away from zero, the more profitable your system becomes. So by just having your data and punching this in here, you'll be able to tell right away whether you're profitable or not if you don't know. And so I could look at anyone's data. I could be like, all right, this guy has a 45% win rate. Now his average winner is 15% and his average loser is 13%. Now, even though that individual has a higher average winner in percentages than the average loser, due to the win rate, they have a negative expected return. So overall, they are not a profitable trader. Whereas let's say that individual has an average winner of 15% and an average loser of 11%. Well, now they're just slightly positive. They're slightly profitable. Now, let's say in theory, someone has an 85% win rate, but their average winner is 15% and their average loser is 20%. They're still going to be profitable. Or let's say their average loser is 30%. They're still profitable. And as a last example, to kind of give you guys a perspective on expected return and how important your average winner, average loser in correlation to your win rate and vice versa is, let's say someone has a 90% win rate with an average loser of 40% and only an average winner of 15%. They're still wildly profitable because their win rate is so high. Now, on the other hand, let's just use another extreme example. Let's say they have a win rate of 20%, yet their average winner is 40% and their average loser is 5%. Well, they're going to be profitable and then they're going to be flat at 10%. So you really can start to see and play around with, well, based off of my win rate and my average winner and average loser, if I'm not profitable now, where do I have to go to become profitable? And then if I really, really want to start making a lot of money, where am I going to have to be? So let's again go back to kind of our benchmark, 75% as a win rate, an average winner of 30%, and an average loser of 10%. That gives us an expected return of 20%, which is really good. Now, the other two variables that are specific to the trader using this tool is going to be the risk percentage, next followed by the account size. The risk percentage, or RP, is essentially how aggressive that individual is in their trading. How aggressive do you want your winners to be? At the same time, how big will your losers be, right? Based off of your performance. 100% would just be the most aggressive. Okay, you're gonna have the biggest wins, but you will also have the biggest losses. Hopefully not losses, right? If you are actually following what the risk management calculator tells you, but you'll have a way more aggressive, essentially trading approach the higher you increase that RP. So let's just say for theory, I'm going to start out at a 10% RP. The last variable is going to be account size. I trade with $500,000. Let's just use 100,000 in theory. Now, the other inputs, which being in my case, like I said, I trade options. So contract value, upside, downside, those are going to correlate to the risk metrics behind that specific trade that you're going to be taking. So for example, let's say our contract value is going to be $500, one contract. Now our upside on that contract, let's say, is going to be $75. And our downside on that contract is going to be $25. Now we can see what the risk management calculator has done using my algorithm. Kind of moving from left to right, we've got position size, we've got upside percentage, downside percentage, maximum purchase quantity, risk to reward ratio, our break-even risk to reward ratio, and our break-even win rate. Now, let me break down what these risk metrics actually mean. So our upside percentage is based off of this $500 contract, and this is based off our take profit, right? This is our take profit and this is our stop loss. I use the Analyze tab in Thinkorswim to get my upside. So exactly at which point I hit my take profit, I'm gonna make $75 on that, well, let's say in theory, right, $500 contract. Whereas on the other hand, my downside, if I hit my stop loss, well, I'm going to lose $25 on that contract. So our upside is going to be 15%. Our downside is going to be 5%. This is going to be either green or red. And that goes for maximum purchase quantity, risk to reward ratio, and break-even win rate. For this to be a trade that we want to take, ideally, we want to see all three of these green. And because we have a maximum purchase quantity of 4 contracts, well, it's telling us we can take this trade. Our position size based off of this trade would be $2,000. And if it's $500 a contract, it's saying we could buy 4 contracts. Now our risk to reward ratio behind this trade is going to be a 1-to-3, so a $25 downside and a $75 upside, hence a 1-to-3. Now our break even risk to reward ratio based off of our average winner and average loser is going to be a 1-to-3. So we have a green return on risk to reward ratio because it is at or above our break even. When it comes to our break even win rate, we'd like to see this in the green as well. So to take this trade, essentially what this is telling us is that we need at minimum a 25% win rate to take this trade with this amount of risk factored in. Now, the position size, that is determined by the variables that we've entered within the inputs. So looking at all of this, we see if this was a trade that we actually found on a chart, we analyzed this chart, we found that setup that we wanted to trade, we found those contracts, we set our stop loss and take profit. Well, now we know based off of our account size, we're trading with $100,000 at a 10% RP based off of our average winner, average loser win rate. And then when it comes to this trade specifically, this is the position size that we should go in with. Now that is not only going to make sure that we are consistently profitable, as long as we stick within, this plan, we get out exactly when we intended to get out. We're not only going to be consistently profitable, but we're going to squeeze the most we possibly can out of our system. Now, to give you a couple more examples, let's say the contract value is going to be $5,000 and our upside is going to be $2,000, whereas our downside is going to be $3,600. Maybe that's a bit of an extreme example, but we can see here that our position size based off of this trade is $370. So we can't buy any contracts. This is a trade that essentially the algorithm will not let us put on due to the risk. Our downside is 72%, our upside is 40%. Our risk to reward ratio is a 1 to 0.556. So we can't take this trade. At minimum, yes, we would need a 64.29% win rate, but again, we need to see all of these in the green. Now, lastly, let me give you an example of how I actually go about trading. So I trade with $500,000. My RP at year start was 10%. So at the beginning of the year, January 1st, 10% RP. Now, as the year progresses, if I have a green month, I'm increasing RP. My baseline is 10, and then it won't decrease below 10. And if I have a red month, my RP decreases off of wherever I'm at. Okay. So if I have a green month, I'm increasing by 10% RP. If I have a red month, I'm decreasing by 10% RP. Now that is how I scale my account consistently. Now my win rate is currently sitting at 68.42%. Okay. So 68.42%. That is my overall win rate, not per setup. My average winner is sitting at 18.08. where my average loser is sitting at 14.65. Now let's say I go to put on a position where the contracts cost $600. I set my take profit. I run this trade through the Analyze tab on my trading platform. My upside is going to be $120 and my downside is going to be, say, $140. Now, even though this is a position that I could put on, okay, and again, I'm at, by mistake, had one extra zero down here. So 500,000, not 5 million. Now this would still be a trade that I could put on. As you can see, the position size is reflected by 2,000, about $700, which would allow me to buy 4.5 contracts. Obviously I can only buy 4 contracts. Now based off of this trade, my break-even win rate is green, but my risk to reward ratio is red, whereas I can still buy contracts, right? There is position size that could be allocated into this based off of all these variables, again, that the algorithm takes into consideration using your historical performance as projected performance, obviously taking into account our break-even win rate, break-even risk to reward ratio. The algorithm is going to distribute more capital or more into the actual position size based off of those variables. So you have a setup that, for example, say you have that 80, 90% win rate. Well, based off the average winner and loser, the algorithm might distribute more capital into that position, whether or not the risk reward is good, or the other variables like we just mentioned. So this isn't a trade I would want to take because not everything's green. Now, just because we don't have green across the board here, doesn't mean that this is a trade that I can't take, but we want to look to see everything green. That is going to give us our best shot in making the most money we can out of our trading as a whole. Okay, now let's just say I'm going to increase my RP next month to 15% because my trading's going well. And let's say I'm going to enter a position where the contracts are $400 and my upside is, let's say, $85 and my downside is, say, $65. All right, there we go. My position size is going to be $6,000. So I'm going to go ahead and buy 15 contracts. Everything's looking great. I will enter that position. So that is my risk management calculator. That is how I consistently manage risk. That is how I find consistent profitability within the stock market myself. This system allows me to trade variable size, variable risk to reward using my own data to squeeze the most profit I can out of my system as a whole. Now, if you guys want me to make this risk management calculator public and available to everyone, drop a comment below. Maybe that's something I could look into doing because I know this would help a lot of you guys out there, and you could even manage risk with a small account by having this. This is just going to make the world of difference within my students trading over inside the mentorship group. So they're all going to be getting this very soon. So again, if you're interested in my mentorship group, the first link will be in the description below. You can head over to my website and fill out that application. With that said, I hope you guys did enjoy this video. I will see you all in the next one. Later.